Hello everyone, welcome to my channel Learn on Internet. So today our topics of discussion are: Number 1. Why Dual Model of GST is implemented in India. Second, the position of GST in Jammu and Kashmir after revocation of Article 370. Third, understanding the principle of destination based tax of GST. Fourth, legislations governing GST. Fifth, manner of utilization of ITC credit. Sixth, benefits of GST, and finally the seventh, problems persisting with the implementation of GST. Let's discuss our first topic of the day, which is why India has adopted the dual model of GST. That is, we are charged CGST and SGST or UTGST. This is because Part 11 of the Indian Constitution specifies the distribution of legislative, administrative and executive powers between the Union government or the central government and the states of India or the state governments. Thus, in order to perform their responsibilities, the collection of GST has been distributed in dual model. That is, the center and the states will simultaneously tax goods and services. In the earlier tax regime or system, center had the power to tax intrastate services but not goods, and the states had the power to tax intrastate sale of goods but not services. Thus, in order to bring this dual model of GST, which enables center and the states to simultaneously tax goods and services, the constitution had been amended to provide that the center and the states will have the power to tax goods as well as services. Our second topic is the applicability of GST and its applicability in Jammu and Kashmir. GST will be extended to the whole of India, including Jammu and Kashmir. Now the question arises, what is the position of chargeability of GST in the state of Jammu and Kashmir? When Article 370 was enforced, Jammu and Kashmir had a separate status of a state and was administered by India with a separate set of rules regarding purchase of land, citizenship, etc. in the state. But after the revocation of Article 370 and passing of Jammu and Kashmir Reorganization Act 2019 by the Parliament, enacting the division of the state of Jammu and Kashmir into two union territories, that is, Union Territory of Jammu and Kashmir and the Union Territory of Ladakh, the Jammu and Kashmir government will implement proposed changes to its GST law, excluding provisions parallel with CGST Act, and amend the provisions with reference to the UTGST law for the Union Territory of Ladakh, and implement SGST Act in the Union Territory of Jammu and Kashmir because it has a state legislature. Getting on to the third point, that is the principle of destination based tax of GST. GST is a destination based tax subject to exceptions thereof. Suppose goods are sold from Gujarat to Rajasthan. The tax amount will be deposited with the Rajasthan state government because goods are consumed in Rajasthan. Further, GST being a destination based tax applicable on all transactions involving supply of goods and services for a consideration subject to exceptions thereof, GST in India will comprise of CGST, which will be levied and collected by central government, SGST, which will be levied and collected by state governments or union territories with state legislatures, and UTGST, which will be levied and collected by union territories without state legislatures, on intrastate supplies of goods and or services, for example, within Gujarat from Kutch to Amreli, and interstate supplies of taxable goods or services will be subject to IGST, which is a sum total of CGST plus SGST or UTGST, and will be levied by center on all interstate supplies, the state tax portion of which will then be shared with the state in which the supply takes place. For example, when taxable goods are sold from Rajasthan to Madhya Pradesh, the seller will pay IGST, which is the sum total of CGST and SGST, which will be collected by the central government, and the share of Madhya Pradesh state tax or the SGST of Madhya Pradesh will be provided by the central government thereafter. One of the query which arises here is why the tax cannot be directly transferred from Rajasthan to Madhya Pradesh government. This is because there is no joint control over funds of two or more states. Further, each state would have to maintain the accounts for all the other states regarding transactions, which will create a huge task load, and thus a central payment mechanism system has been opted for in order to ease the process of transferring the amounts due to each state. directly by the central government, which will maintain the ledgers and transactional flow details of all other states. Our fourth topic is on the legislations or laws governing GST. First, there is a single legislation known as CGST Act 2017 for levying CGST. Second, similarly, there is a single legislation known as UTGST Act 2017 governing union territories without state legislatures. And there are separate SGST Act 2017 for each state or each union territory with state legislatures. Although there would be multiple SGST legislations, the basic terms and meanings related to chargeability, taxable person, and definition of supply, etc., would be uniform in order to avoid complete diversification from the law and maintain uniformity. Now coming up to the fifth topic, which is manner of utilization of input tax credit. By going through the provisions and understanding, we know that CGST is levied and collected by the central government. IGST is also levied and collected by the central government, and then the portion of SGST or UTGST is distributed to the respective states or union territories. However, SGST or UTGST is levied and collected by the respective states or union territories. Thus, due to the federal structure of our country, the manner of utilization can be understood as CGST can be utilized for the payment of CGST and IGST because both are being collected by the central government. IGST can be utilized for the payment of CGST or SGST or UTGST because IGST contains portion payable to the states or union territories. Similar to CGST, SGST or UTGST can be utilized towards the payment of SGST or UTGST and IGST because it is the share of state government. Coming up to the sixth topic, that is benefits of GST. Number 1. No multiple taxes to the extent. Several duties such as central excise duty, additional excise duty on medicinal and toilet preparation, state level VAT, central sales tax or CST, entry tax or octroi, purchase tax, service tax, countervailing duty under section 3 subsection 1 and countervailing duty under section 3 subsection 5 of the Customs Act, tax on betting, gambling, lotteries, luxury tax, entertainment taxes and various cesses such as Swachh Bharat cess, Krishi Kalyan cess, etc. have been subsumed into one tax, that is GST. Number 2. No cascading effects. Cascading means passing on to others. Thus, by subsuming multiple taxes into one, that is GST, and allowing prior stage taxes as credits, the ill effects of cascading can be removed. That is, no tax on tax system will prevail subject to few. If you haven't watched our video on how only value added is taxed and input tax credits are availed, click on the panel shown to you on the right hand side. Number 3. No double taxation to the extent. Double taxation means a single product or service is being taxed twice due to the unavailability of clarification of the definition on whether to identify such supply of goods and services as under goods or services. Like in the earlier regime, restaurants provide catering service as well as food, which is goods. Due to the law that state government will tax goods and central government will tax services in the previous regime, it was considered as providing goods as well as services, and due to which VAT and service tax both were being charged by such businesses. With the implementation of GST, maximum of such incidents have been solved and only GST will be charged. Number 4. One nation, one tax. With the objective of one nation, one market and one tax, for which the GST was implemented to simplify the laws, to simplify the compliances for businesses from ever-changing laws via amendments and circulars, GST provides uniformity in provisions, thus creating ease of business in India. Number 5. Buoyancy to the government revenue. Earlier, there were several goods and services covered under the exemption list in the old tax regime. By decreasing the list of exemptions on both goods and services and increasing the tax base, that is, with the advent of more situations for taxability into the tax regime, it will lead to increase in the funds of the government. Number 6. Boost to Make in India initiative. Before getting into the sixth benefit of GST, let's watch a short video clip on Make in India initiative.
2014 के बाद एक के बाद एक पॉलिसी रिफॉर्म किए गए। बीते 5 वर्ष में भारत में ईज ऑफ डूइंग बिजनेस को लेकर अभूतपूर्व सुधार हुआ है, जिसका लाभ निश्चित तौर पर डिफेंस सेक्टर को भी मिल रहा है। आज भारत का मंत्र है मेक इन इंडिया, फॉर इंडिया एंड फॉर द वर्ल्ड।
Thus, GST has been introduced with the object of Make in India, and providing the ease of business in India via GST will attract many businesses and contribute to the economic growth of our country. Finally, coming up to the last topic of the day, that is problems persisting with GST. Number 1. Concept of multiple taxes has not been completely diminished because certain taxes such as basic custom duty, anti-dumping duty, CVD on subsidized articles, entertainment taxes levied by local bodies, electricity duty, stamp duty, road tax and passenger tax, toll tax, property tax still persist even after the implementation of GST. Second, cascading effects in few cases still persist. For example, with the applicability of custom valuation rules, IGST and GST compensation to states is charged on the value including basic customs duty. Thus, tax on tax or cascading effect still exists if these goods are not meant for further export. Thus, with the help of an example, let's understand this drawback. The assessable value for customs duty, let's say, is Rs 100. Basic customs duty at the rate of 10% comes to Rs 10. Social welfare surcharge charged on such duty at the rate of 10% amounts to Rs 1. Thus, total assessable value for IGST comes to Rs 111. IGST payable at the rate of 18% comes to Rs 20 on Rs 111. Thus, total value payable comes to Rs 131. Thus, we can see that IGST is charged on basic customs duty as well as social welfare surcharge and thereby has the cascading effect of tax on tax. Number 3. Double taxation also exists in few cases. Similarly, in case of tobacco and tobacco products, excise duty is first being charged on the manufacturer and also GST is being charged on the supply of such goods. Concept-wise, it is a drawback, but factually, we don't think double taxation on tobacco is a drawback. What about your views on double taxation on tobacco and tobacco products? Comment down below. Thank you very much for watching. Please like the video if you found the content to be useful. Subscribe to our YouTube channel and don't forget to press the notification icon to get notified whenever a new video comes up. Share it with your friends and family to spread the word of knowledge. Also comment down below for any queries. You can also subscribe to us on Blogger for more knowledgeable content and follow us on Instagram, Twitter and Facebook for behind the scenes and daily updates. You can also join our Telegram channel and listen to us on Spotify. The links of all are given in the description below.